What's up, family? It is Caden with Urban Finance. Today I'm going to be doing a breakdown of my $45,000 Vanguard stock portfolio. In each of my brokerage account, I implement a different strategy. So in my Robinhood or my Charles Schwab or my Fidelity account, all have slightly different strategies that I'm using. But if you're new to investing, go ahead and check out the description below. I have a link so you can get a free Robinhood stock. And if you're new to this channel, I talk about everything related to financial literacy, investing, and urban finance. And if I'm being honest, urban finance is whatever I feel like talking about. So go ahead and smash the like button. It really helps the channel out, and it's free. Subscribe to the page and hit the bell to be notified of when I post something new. All right, let's jump in. What we are looking at right now is the inside of my Vanguard portfolio. As you can see, I have a little over $45,000 in here. So the first fund in my portfolio is Vanguard Star Fund, which is VGSTX, which has a expense ratio of 0.31% and a minimum investment of $1,000 needed. I actually would not invest in this fund again if I had the opportunity, even though it has been doing really well. I think the primary reason I invested in this one was because I did not have the amount of money for Vanguard's S&P 500 fund at the time. And so whenever I hit $3,000 within this account, I will probably move it over to a S&P 500 fund. As you can see, the 1-year return on this fund has been 15%. And I think personally, I'm even higher than that for my personal return on this fund. So while I'll be moving the money from it, it has performed really well. The second fund that I'm holding in my Vanguard account is Vanguard Information Technology ETF, VGT. And this has also performed really well. As you can see, the year to date, it has had a 46% return. And so a marvelous return. And like I've shown, or I will show later, I've only had this account since about March, so it has been doing really well thus far. And with the ETF for VGT, there's no minimum amount you need to hold, only the price of one share, compared to its mutual/index fund, which the minimum is $100,000. And the last account I'm holding in here is Vanguard's 500 index fund, Admiral shares, Vfiax. And as you can see, you need a minimum investment for this one for $3,000, and the 1-year return on this is 15%. And so since I've had these accounts, I've done really well with Vanguard thus far. Here you can see my overall performance for this portfolio. As you can see, I've had this account open for a little over a year now, well, closer to 2 years to be honest. I opened it back in March of 2019, and my current return, I have a 23% return overall in the account, and that equates for a little over $5,000 since I started opening in the account. As you can see, the account at the beginning, I wasn't putting a lot of money in, and then we have a dip as well because I was saving to buy a home, and then after I purchased a home, I actually had to take money out of the account in order to help with a down payment. And so that accounts for some of the discrepancies. And we can see at our peak here, we've had about a $5,272 gain. And for the asset mix in this account is currently 97.5% stocks and 2.5% bonds. And as we can see on the right here, this says this suggested target is for people in your age group, which is 90% stocks and 10% bonds. To be honest, I actually plan to sell my 2.5% bonds and make my account 100% stocks, and then probably around age 50, which is 20 years from now for me, I will probably reduce my holdings of stocks to about 10%, maybe 20% or something like that. But right now I see very little reason to be holding any bonds in my account since I have so much time for my money to grow. I always like showing the power of compound interest. So as you can see before, my current return for this account is 23%, and I'm under no illusion that I can sustain that over the course of the next 30 years. But let's say I was to just leave this money in here over the course of the next 30 years and get a 10% return on that dollar, which is relatively high, but the market has been pretty good lately. That will leave me with $785,000 just in this one account, and that's without adding a single dollar to the account. And just in this account alone, I think I add somewhere between $900 to $1,000 every month. And so if I was to, let's say, add $900, that will leave me with $2.5 million in this account. And that's the power of compound interest. Obviously, we know even if we were to do a 9% return, that's still $2 million. At an 8% return, that's over $1.5 million. And that is the power of time and compound interest right there. All right, family, I hope you found this video to be informative. Like I always say, money to best friend is time and compound interest. And if you have those two things on your side, well, really time, because compound interest is just a factor of investing. But if you have time on your side, you can really build a huge nest egg with just investing a little bit of money over the course of a long period of time. If you haven't already, go ahead and smash that like button for me. Let me know if you have any questions in the comment section below. I'd love to hear from you. And like I always said, even in the midst of these times, make sure you're living your best life.